Hey guys, welcome back. You're still tuned into Trading Hour. We're in the middle of the earnings season, so there's lots to talk about. And let's talk about IRB Infra now, which is on our radar following its Q2 results. The company delivered a largely steady quarter with profit after tax doubling on a year-over-year basis. In fact, a lot of the brokerages such as CLSA have also raised their target price for IRB Infra. They have a buy call on the stock, and they say that a pickup in both toll traffic as well as order backlog in the second half of FY23 could really aid their performance. So to discuss all of this along with the order pipeline, we are joined by IRB Infra's Group CFO, Tushar Kawedia, on this show. Now, Mr. Kawedia, good morning and thanks a lot for joining us. This is Pavitra, and from the entire team, season's greetings to you. I want to begin by actually asking you about the toll revenue itself, because that has seen a big jump in Q1. I think it's up over 50%. So can you tell us what you're penciling in for the second half of the year? And also, what do you know so far on the toll price hikes as well? Is there something coming up in this quarter? I do know that from April onwards, there's supposed to be one.
Yeah, sure. Thank you. And I would like to wish all your viewers a Happy New Year. On the revenue front, as you rightly mentioned, the toll collections are showing a good, robust growth for us, comparing half year with the last year, half year. So there was almost 20% kind of growth in the toll collections, whereas this momentum is still continuing with festive season around. And we expect that similar 20% growth would be there for a full year basis, considering the projects showing higher growth in the traffic numbers as well. On the tariff front, we all the projects for the year has already received the tariff hike, wherein it was due in the month of April, and the collection includes both the tariff and traffic hike for us. On the construction front, as you rightly mentioned, we have seen a slight slowdown in the last quarter, but due to monsoon and some of the projects getting appointed date post September, wherein the Ganga Express Highway, the SPV has received the appointed date very recently on 12th October. We will see that the construction revenue to pick up in the third and fourth quarter. The Ganga Express SPV also contributes almost 50% of our, or more than 50% of our order book, and we are already geared up to execute this project in next 2.5 to 3 years. On the
so
Ganga
when you,
Express,
just one interruption. So you're saying the Ganga Expressway is 50% of your order book currently, right?
yes, that's right. More than 50%.
Okay, so
From
in
the-
terms
on
of, in terms of revenues that you plan, the earnings from this project, how much will it be and how much will come through in FY24?
Yeah, sure. So if you see, our order book stands at 20,000 plus crores, including O&M order book, out of which EPC order book stands around 9,000 crores. Around 5,000 plus crores is to be contributed by the Ganga Expressway in next 2.5 to 3 years. As we see, the other projects are also commenced their activity, which includes the 3 HAM projects and the Palsit Dankuni, the BOT project in the state of Bengal. So all projects are now under construction, with Ganga Expressway already done the fundraise in this month, wherein the first tranche of equity is already raised, wherein the Sovereign Wealth Fund GIC, having 49% stake, has already participated by contributing an amount of 261 crores towards the first tranche. And with this kind of capital structure, where IRB owns 51% and GIC owns 49%, we are quite confident of executing the project well within the time frame, and and this project will contribute to our construction revenue for coming years.
Okay, so you're confident of executing this within the timeline. You also said 20,000 crores is what your order book currently looks like. Can you tell us, apart from the Ganga Expressway, what is the execution timeline like?
So if you see on a EPC front, it's 9,000 crores again to be executed in next 2 to 2.5 years, which includes the 3 HAM projects. The O&M projects includes the projects under the private InvIT, the public InvIT, and all, and also now the Ganga Expressway, wherein the SPV is now treated as 51%. So there also the O&M order book contributes roughly 5,000 crores, which needs to be executed over the concession period.
What does all of this mean for the debt? What's the total debt on the books? I get that there is, of course, a lot of project debt as well because of the order book growing. but what is the expectation over the next 12 months?
So if you see our consolidated debt, including SPV debt, is somewhere around 13,500 crores. And we are quite comfortable, wherein our net debt to equity ratio has come down to 0.80:1. And also our SPVs with the better ratings now have seen a good reduction in the interest rate, thereby reducing our finance cost. With higher ratings in all the SPVs, we are able to reduce our interest cost despite of having a higher inflation in coming quarters. So this is something which is working in our favor, where we have already improved our ratings at the parent level with a AA category, and now this is also supporting the other SPVs where the collections have improved. With the strategy to reduce our finance cost, we are working to get this reduced on a better ratings for all the SPVs in the portfolio.
All right, we will leave it at that. Thanks a lot for joining in, and all the best for the business.